Well, Happy New Year and welcome to our January 2026 San Luis Obispo County Market Update. We're excited to be this first update of the year of 2026, and we're even more excited to make this our first with our brand, our new brand, Equity Union Real Estate. Very excited for this move. So I hope you had a great holiday season. We're able to spend some time with family and friends. Of course, we wish you and your loved ones great health, happiness, and prosperity as we head into 2026. Personally, I'm just lucky to be alive and kicking at this stage of my life. So today I just want to take a look back in time, having done this for 35 years, and check out the local real estate market and discuss what's changed and what we expect as we go into 2026. First, we want to just touch base on what's happened in December for our regular market update. Inventory of active homes was up about 7% over a year ago, but that's down from the 70% jump we had over the summer months. So a lot of inventory came back to a much closer level to a year ago. Pending sales, very strong month, up 13%. Closed sales also up 13%. So people thought, December's not a good time to sell. We had a phenomenal end of the year. And in terms of new listings coming on the market, that was down also about 12%. My guess is we're going to have more homes come on the market after the first year. We always do. So what this all tells us is this buyer activity has increased significantly over the course of this year, even as sellers remain cautious about bringing their homes to the market late in the year. Overall, I'm going to say we've balanced, or we've turned into what I would say is a more balanced market compare where we started 2025. So let's kind of look at how different areas have performed. So if we take a look in the North County and Paso Robles, closed sales more than doubled compared to a year ago. Prices moved up modestly on average, and this continues to be one of the strongest markets for buyers looking for relative affordability. Atascadero finished the year with more sales and a higher average sold price compared to 2024, even though homes had more days on the market, which we're seeing throughout the county. But that points to a pretty steady demand with more thoughtful buyers. As we look at Arroyo Grande and the 5 cities, prices increased especially year over year, and sales activity remained strong, showing again continued demand for South County homes. And then along the coast, as we think of Morro Bay, Los Osos, come down Pismo, Avila, and Cayucas, of course, and San Simeon and Cambria, inventory is higher. Buyers were definitely more selective, and homes that are priced correctly are selling, but we're seeing a lot more days on the market, definitely more price reductions when homes miss the mark in the beginning. And I say that a lot of that's because of the higher pricing and more discretionary buyers buying second homes. That took probably the biggest bump or hit, I would say, this year. Overall, higher inventory across most areas gave buyers more choices, gave more negotiating power, and leveled the playing field than they've had in years. And I would say sellers were rewarded if they priced competitively, kept condition really good, and that led to a faster sale and stronger offers. Otherwise, the other tail of the tape was over 50% of listed properties had to reduce their price to gain a buyer and gain more interest. I want to talk about interest rates because interest rates play a major role in how the market does. Real estate is local, but major forces, economic forces like rates, definitely affect what's happening. So, for example, if we go back to 2005, 2006, 20 years ago, that big bump up in the market before we had the fall, interest rates were around 6%. We jumped to 2018, somewhat right before COVID, 4.5%, very attractive. Then in 2020, what did we see? 2.6 to 3% on average. Come on, that was ridiculously low. Then 2022, we jumped from about 3% to over 7%. And now we finish this year at 6%, just like it was 20 years ago. So one of the most important takeaways and strategies that mattered more than ever early in the year is, we could see sellers pushing their prices and still see activity. By the end of the year, buyers were more disciplined. Homes that were priced correctly and prepared well to sell did sell, but homes that were overpriced really paid the price, sat longer, required more price reductions, as I mentioned before. So we also saw negotiating change between buyers and sellers, where buyers were more comfortable asking for repairs, credits, rate buy-downs, and smart sellers were more willing to work with them and to keep the deals together, and they were more appreciative buyers. I would say the key word is compromise. So this tells us something about 2026. Success isn't about timing of the market. It's about having the right price, good condition, strong marketing, and a clear plan from day one. As we look forward to 2026 and we head into this new year, here's the bottom line. I think we're heading into the year with higher inventory, but stronger buyer activity and a market that's far more balanced than we were in 2025. It's a more normal market, in my opinion, and one I've seen for decades. So for buyers, that means you're going to have more options, more negotiating power. For sellers, it means pricing and presentation of your property absolutely critical. So if you're thinking about buying or selling this year, obviously we're happy to talk to the current market situation, what it means for you, because every situation is very unique. So thanks for watching. Thanks for a great 2026. Happy New Year, and we will see you in a month.